Sorry about that, guys. Can you hear me now? All right. Sorry. Okay, so to recap the very first part to me, U.S. market's kind of drifting sideways over the last, continues to drift sideways over the last, week or two sessions. As you can see there, we just really had a slow downward drift yesterday. Most sectors down across the board. We had Asia that was down, everywhere except for Hong Kong, which is really flat at the moment. Japan actually down now over 2%. The yen strengthened a little bit on the back of Finance Minister Taro also said that lowering the corporate tax rate would only have a limited economic impact. And really, we've just seen such little leadership in the overall, in global markets as of late. I would say the one thing that has been kind of a consistent theme for the past couple weeks has been the commodity prices have started to rally a little bit again. That continues a little bit this morning. Everything but the copper future is up this morning, so we'll watch that going forward. We had a couple earnings out this morning. We had Northam, which was a beat on guidance, and definitely a beat from what the previous expectations were out of Bloomberg. But came in at 137. Expectation from their guidance on the trading statement was 133. Revenue was also a beat at 4.42 versus 4.31, but they're paying no divvy. No divvy was expected. Then Standard Bank, I think, this morning is significant because this is kind of setting up a little bit of a pattern in our local shares with ABSA first. Nedbank was actually okay, but wasn't spectacular. Now you've got Standard Bank that's a bit weak. They came in headline earnings per share at 506. Expectation was for 522. I actually think that's a reasonable miss. Divvy per share came in more or less in line, missed by a cent. Some of the things that they commented on is outlook, expect cost pressures will continue in the second half, but they're confident of growing revenues in a challenging environment. So I think, all in all, I think it's definitely a miss out of Standard Bank. I think the market, the share has gotten a boost strictly because the sale of part of their unit in the UK. They didn't mention much about that this morning. That could be the once-off. There's a little bit of a once-off in the numbers. I think that took their profits from 11% up to 14%. I'm assuming that might be it. But nevertheless, I think that was kind of a once-off positive for them. The overall numbers I don't think are fantastic out of Standard Bank, so I would expect to see some pressure there this morning. We also had All Mutual, which is raised to overweight versus neutral at JP Morgan. And then market data today, we've got retail sales out the UK at 10:30. Obviously the big ones, initial jobless claims in the States, but lots of things in the States are coming along with that. Empire Manufacturing, CPI, net long-term inflow or net long-term TSE flows, industrial production, and the Philly Fed business outlook. All right, let's have a look at the maps. All right, first chart I'm going to show is Billiton. You can see here we had a monster move after that breakout from this little consolidation, this little flag that we built into on that breakout. Obviously, in 3 trading sessions, we literally moved 20 rand. That's quite significant. But what's interesting is that we're possibly setting up a little bit of maybe a triple top here. I also think it's very interesting is how, as soon as our market closed, you really saw, things like Billitons and Anglos drift off quite hard in London. They came down. 0.75% just after, literally in half an hour after we close, and I think a lot of that's due to, the underlying strength in our market and the fact that volumes are so light everywhere. that we can actually drive the price in London at the moment. So I think it's important to realize that. I think there definitely has been a lot of the buying here locally, but watch this level. If we can close above 310, then this thing could really be off to the races, could have more room to the upside. It is really extended, but if it doesn't get above there soon, I wouldn't be surprised to see us retest these levels where we broke out from around 290. All right, let's look at breweries. Breweries also coming up against some longer-term resistance on this flag pattern. Obviously, we just paid a divvy on SA Breweries. You can see here this longer-term flag pattern is really it's kind of failed multiple times on this level. We did kind of set up a little bit of a mini flag back here, which we failed. We traded below for a while. We're also coming up against that same sort of resistance level there. I believe, if I'm not mistaken, is 494 is the number. You can see how much of the channel that we've really been in here. So I think either way you slice it, it is definitely it's up against some form of resistance. I would definitely look at this as a potential long if we get above 494 on a closing basis. If we don't get above there on a closing basis, this might be one that's not bad to fade in the near term. All right, first trend. First trend also, obviously, it's broken out in terms of the shorter term. We definitely made a nice breakout here from about the 29.50 level. It's taken us all the way to 30.20 yesterday. There's resistance here at around, call it 31.35. I would probably expect these things to struggle a little bit on the back of Standard Bank's numbers, but NetBank also didn't have the greatest numbers, and nothing's really happened there. So we've really seen we saw a breakout on this flag here, and it's definitely coming into some sort of longer-term resistance here in first trend. So just be careful around those levels. You could make a little bit of reversal, and we could come back to test that support at 29.50. All right, Nasper's obviously the big one from yesterday. Let's shorten this up a little bit. So we can see it a little bit more clearly. I mean, without question, the main level to look at here is right at 800, which is right there. This is you can see there 800 is definitely support for Naspers. Yesterday we traded to 801. We got to close up in the auction, obviously on 10 cents numbers, which were a miss from all analyst expectations that we saw. It did trade reasonably well in Hong Kong. It basically closed flat on the day after being down 5% early. But I just want to point out the levels here, the major levels, and what we're going to look for. The first one's obviously the 800 level. If we drop 800, without question, sorry, I don't think I'm on 800 here. I don't think I've drawn this right now. That's at 807. Sorry about that. Didn't think that looked right. Here we go. Here's our 800 level. And that's definitely our resistance level, our support level at 800. If we drop 800, the next level that we're going to look at is right about there. That's where we broke out from on that continuation pattern. That's at 760 Rand, pretty much on the dot. And if we fall further than that, then I think the next level of support is right down here. It's at about 746, I believe. And so those are the real major levels that I would be looking. I mean, I don't think there's any way you can slice it yesterday that those numbers weren't a miss. You don't always see stocks that will correct when they miss numbers, but you would think with the high expectations that they had, and how well the shares have been trading, that you would get a major correction out of this kind of a miss. So I would look for this thing to potentially correct over the medium term to down around 760 or 746, somewhere in that area might be the risk range to really look to put your longs back on if you like this share longer term. All right, let's have a look at Amplats. I'm actually going to pull this up 30-day here, and just yesterday was potentially the start of a reversal, was some sort of reversal day. You can see there we made a high yesterday, in terms of more than just an odd lot there. It actually traded up there around 396 for a while, so right there where we were trading. And then we reversed, at least below the previous day's lows. We managed to kind of close right at the previous day's lows on the back of the strong finish in our market. But bottom line is, it looks like a little bit of a reversal day. I wouldn't look for anything more than a correction to this 360 level, strictly because it's just been it's made such a steep run. But this potentially could be a little opportunity to give us a pullback down around to 360 in Amplats. All right, let's look at Investec. This is the INL ticker. This one looks a lot like maybe what FirstRand looked like a few days ago when it broke out at 29.50. Really kind of flagging into this level and breaking out. What I'd really like to see is a further breakout above this, what looks like it could be a left shoulder at 70.20. If we get above 70.20, then that's where I'd probably feel a little bit more confident putting a long on, just because this pattern definitely is looking a little bit head and shoulderish. As you can see there, it's quite an obvious potential head and shoulder setup. So just be careful of this one. If you buy it on the breakout, if it's struggling to get above kind of 720 on a closing basis, then I might pull back a little bit. Okay, the next couple I want to show are dual listeds, but I'm going to show them in the States just for continuity purposes. You can see there, because yesterday we had a real move higher after the close in the States on these shares, and this is Goldfields. You can see Goldfields, and we're just looking at a 10-day chart here, but it's really, we had this real steep pullback yesterday, day before yesterday, and then yesterday we really pushed up, and then in the final portion of the day really broke out here from resistance at about 620, 622, call it. This is coming down from about 577, so I would expect this thing to have a good 55 cents to the upside from that 622 breakout. So I really could see us trading up to $6.70 on Goldfields and could get there rather quickly. Harmony looks very much the same. Looks ready to make that breakout in Harmony. I mean, the fact that quite bad earnings yesterday couldn't get them down, I think maybe has drawn a line in the sand now that these things have bottomed out, and they're probably going to give us even more of a day cap bounce. At 413, you can see there, if we break above kind of call it 414 in Harmony, then I think we've got another 30-40 cents left to the upside. Don't forget that that's a good 10 to 12%, so it's not such a tiny move when you're looking at that in dollar terms. And then the last one I'll show is Anglo Gold. That lists in the States as well. It's already made that breakout on this little continuation move at $13.60, and really probably only has about another 80 cents of upside left to it from there. So I would call it at 1440 that we could get to rather quickly in Anglo Gold in the next few sessions. You can see gold is really starting to push up at the moment to potentially test this level in the gold price here at 1350. We're at 1341 at the moment. Like I said, if we break to the upside of this, we really could get things moving. John Paulson and his quarterly filing for his hedge fund yesterday showed that he sold over half of his shares in the GLD. He was the biggest holder. So I think the fact that he's dumped such a big stake is definitely a positive thing for gold and for the shares in general as well. That's it for today, guys. Thanks a lot.